Think palm oil is only used for cooking and baking? Think again. Bursa Malaysia Derivatives operates the most liquid and successful crude palm oil futures contract in the world that is traded by many. With an impressive track record of over 30 years, Bursa Malaysia Derivatives FCPO price has become the reference point for market players in the edible oils and fats industry. Ananda observes that the increase in the price of crude oil has always been reflected in the rise of the crude palm oil price. He foresees the crude oil price rising. To make profit out of the bullish market, he can use FCPO contract in the following manner. He can also use the same strategy for any other indications of a bullish market. How can you benefit from trading FCPO? Traders can use FCPO to gain leveraged exposure to movements in crude palm oil prices. Plantation companies, refineries, exporters, and millers can use FCPO to manage risk and hedge against the risk of unfavorable price movement in FCPO in the physical market. FCPO is traded electronically on CME Globex, a global electronic trading platform that allows individual and professional traders anywhere around the world to access all of Bursa Malaysia Derivatives products. Trade FCPO today. Contact a licensed futures broker or visit www.bursamalaysia.com. Enhance your stock trading strategies with FKLI. What is FKLI? FKLI is a futures contract on FBM KLCI, traded on Bursa Malaysia Derivatives, that provides market participants exposure to the component stocks of FBM KLCI. It is actively traded by both institutional and retail investors in their respective trading portfolios. Ryan has been watching the stock market very closely, and he foresees that the market will be on an uptrend due to positive market sentiments. To profit from the bull market, he can use the FKLI contract in the following manner. How can you potentially benefit from trading FKLI as an investor? Traders may use FKLI to gain leveraged exposure to price movement of the largest 30 companies listed on the Bursa Malaysia main board via a single futures contract. Trading FKLI allows you to go short when a bear market is anticipated. You can sell first and purchase later to close out your trading positions. Did you know that institutions also use FKLI to hedge their positions? An insurance company or fund manager with an equity portfolio will sell the FKLI as a hedge to protect itself against a potential decline in the equity portfolio value. Interested in trading FKLI? Contact a licensed futures broker or visit www.bursamalaysia.com. Bursa Malaysia Derivatives presents Rediscover your equity portfolio potentials with FM70. With FM70, you get exposure to underlying FTSE Bursa Malaysia Mid-70 index constituents, leverage trading, and the ability to short sell. How do you take a long position in FM70? Let's assume the FM70 contract is trading at 14,465 points, and you expect FM70 to rise. So you long one FM70 contract at 14,465 points to open your position. Then, the FM70 contract rises to 14,745 points. Now you short one FM70 contract at 14,745 points to close out your initial position. Your gross profit will be 1,120 ringgit. The selling price of 14,745 points minus the initial buying price of 14,465 points equals to 280 points. This is 280 points in profit and equivalent to 1,120 ringgit. How do you short an FM70 contract? Assume the FM70 contract is trading at 14,465 points. You expect FM70 to fall, therefore, you short one FM70 contract to open your position. Assume the price declines to 14,220 points. You now long one FM70 contract to close out your initial position. Your gross profit will be 980 ringgit. The selling price of 14,465 points minus the initial buying price of 14,220 points equals to 245 points. 245 points times 4 ringgit equals to 980 ringgit in gross profit. Interested in trading FM70? Contact a licensed futures broker or visit www.bursamarketplace.com/FM70.